Here we go. We are up and running. Let me get it out on Twitter real quick. See who's going to pop in first today. Share to Twitter. Share to Twitter. Go live chat. There we go. They had a nice downward push today against us. Turn the volume down before I get called out on silence. That is. Hey, Paul, how's it going, man? Welcome to the live stream. Welcome to lunchtime. Man, are you seeing this price movement? That is crazy. Again, that did not make it down to that 2250. That is still looking to be a good good hard level of support right there. Let's see how far can we zoom that. Can't even fit the whole graph in with all the movement we had today. So looking from top to bottom, $1.40 roughly, $1.40 price movement in that short time period. That's not a bad little run up right there. If we can keep this momentum going, of course we see selling pressure stepping back in. But it's like as soon as we're getting pushed down, Claybro goes off. You know, his stream goes off, and then all of a sudden the price turns around. We should haggle Claybro a little bit about that. So how's your day going? I don't know. I'm looking at it. It did not look, across the entire market. It just doesn't look good. But there are opportunities sprinkled all throughout the market. Yeah, I'm just kind of wondering, slower day in the market, wonder if it's going to be slower on all the streams today. I know it seemed like Claybro stream this morning, it did take a bit of time for people to pop in. We just need some good catalysts to come in. Oh, there's our first bot of the day. Thank you, bot, for popping in. Yeah, so I was kicking around, I've talked about a little bit about exit plans for, when the MOASS happens. I'm looking to kind of step out using a staircase approach. Let me grab a drink here real quick. I was about using like a staircase approach, set key levels and, pop out, 10% at a time depending upon how far the run-up goes. And, I, of course, know, little things that I want to do just to increase flexibility during the MOASS, just, on the way up and then on the way back down. But we never really touch on it too much in here. And, you always hear people say, some of the other YouTubers will be talking, when the MOASS happens, price runs up, sell, and then just buy puts on the way out or on the way down. But they never really touch base on, never really go into how to ways to look at how to play the puts on the way down. So I was thinking about, if you had, everyone knows I like the number 1,000. So kind of looking to see if you're using an account that has 1,000 shares to it, that gives you the ability to do 10 options contracts off of the 1,000 shares. Each contract being 100 shares, that gives you 10 contracts. So on the way up, if you're using a staircase approach, meaning that you set to sell 10%, being 100 shares at $1,000, and another 100 shares at 1,100, and another 100 shares at 1,200. So you set up every 100 increment, or every $100 increment you sell 100 shares, and you kind of get out stair-stepping your way upward until you have a key level set up to where, say, you'll do 5-10% increments, and once you hit that final peak, where the peak is for you, you decide that's where the other 50% gets dropped. Now, you never know how, we're not going to know how high the MOASS is going to go. And, it's kind of a guessing game. Everyone has their numbers they're looking for. And it got me to thinking, hey, Danelle, welcome to the live stream. So if you're doing the 10% step out, after you make that initial 10% sell, and you've got that extra capital standing by, that's the point where you should really start looking at, you've got your remaining shares. At that point, you've got 900 shares remaining, off that initial 1,000 share block we're talking about. So you know that you have, hey, you got in Toad, welcome to the stream, man. You know you have 9 contracts worth of shares that are still active. And a really, really powerful tool for maintaining flexibility during the MOASS is buying puts. And kind of one of the ways you can look at it is as you're running up. You sell your first 10% off. You're sitting on a whole bunch of capital, and the share price continues to go up. Now, say you have a minimum price in mind. Let's just say $1,200 is a good minimum price you're looking for. So what happens is $1,200 is the minimum you're looking for. It hits 1,000. You sell 10%. You're sitting on capital. It runs up. It hits your 1,200, but it's still moving. So you go ahead and drop another 10% at 1,200, and then it shoots up to 1,400. So you go ahead and dump another 10% there. At this point, because that key level you were looking for, your 1,200, you've already surpassed that by $200. Now, as the MOASS is happening, they're going to be struggling to get options contracts built out for that, because options contracts don't, we can jump over right now, they only build out for what is reasonable to be supplied. So we're going to jump over on the calls here on AMC, single, let's get all strikes shown here. So as we can see, these are, let's grab the monthlies for January monthlies. So looking at it, the top price on calls for the January monthlies is $145. They haven't built out the option chain any further than that. It takes computing power, it takes work to get the chains built out like this. But as we're going up, they'll be struggling to get an options chain put together. And one thing you could look for is on the put side of the house. Of course, puts are built out for $145 also. But let's play this on multiples right now. Just to we're gonna make up some numbers here just to illustrate how it's gonna go. So let's assume that all of these contracts, let's multiply them by 10, and these are the strike prices during the MOASS. So we're looking at $1,450 on screen, all the way down to $750 on screen. So those are the numbers we're going to use to kind of simulate our MOASS going on. So it shoots up, it hits $1,200 a share, continues on, hits $1,400 a share. So you already secured a ton of capital from selling your selling shares out. Now what happens is you've already sold, let's say, 3 steps. You've already sold 30% of your position, and you're sitting on 700 shares. What you can do is, as it's running up, if you know that 1,200 is that good price that you were willing to accept, start looking at the $1,200 to $1,300 range. Look at the cost of buying puts. Now, what buying a put does, it gives you the right, but not the obligation to sell your shares at that price. So you're sitting on, just to protect yourself, you're sitting on 7 contracts, and you're looking and you're saying, okay, we can go ahead. Now remember, all these numbers multiplying by 10, but you've got the capital available, and you can go ahead and you can pick up 7 put contracts. You can buy 7 put contracts at that $1,200 strike price. Now, the things that can happen when you're buying a contract, they either expire or they're exercised. So you don't want it to expire because you've got a ton of money in there, so you would be looking to exercise. Now you have the option of selling this contract back. So let's say, because there are people who are going to be looking out, well, say AMC goes real good, it stays up, you're in a happy zone, you decide, it hits 1,450, and it kind of starts trading sideways. We're talking, we could be a day or 2 into the MOASS, maybe even 3 days into the MOASS at this point, and you're like, you know what, that is a level that I can go ahead and get out at. So you go ahead and you sell the rest of your shares at the $1,450 strike price, or you sell them at $1,450. So you now have 0 shares. So the puts that you bought to protect yourself against a rapid reversion, meaning that if it was at, if you bought these contracts and the share price was at $1,400 a share, and it immediately dropped down to $1,000 a share, well, because you have those puts in place, because you purchase those puts, you can turn around and you can sell your shares, you can exercise that contract, those 7 contracts, sell your remaining 700 shares at $1,200 a share as opposed to $1,000 a share. Well, you're preserving a whole bunch of extra profit right there by doing that. That's if it reverted. Now, in our scenario, it stayed up at $1,450, and you decided, okay, I'm going to go ahead and get out at this point. You still have those 7 contracts available to you. So you built in flexibility. If it continued to run up, you continue to step out at the level you wanted to step out at, and eventually you sell to where you're at 0 shares. You in your estimation, you've maximized the profit that you care to take. But you always had the flexibility if the stock price dropped on you, if the bottom fell out, and all of a sudden you're losing hundreds and hundreds and hundreds, thousands of dollars. You still have the options available to where if it dropped out, you could still sell at the higher level, whatever strike price you decided to pick. Now, so because you have sold your shares, you're still sitting on these contracts. Well, the thing you can do is you can sit back and wait for the share price, because the MOASS, in the estimation of a lot of people who have been contemplating this, and of course there's no data to confirm exactly how long the MOASS will last, but let's say the MOASS kicked off this week. Well, these are the January monthlies. So these contracts have another 16 days before they'll expire. So AMC can bounce around. It can hit 1,450, 1,500, 1,600, but say 4 or 5 days in, it drops back down into the 20s or 30s because all the shorts have been covered. They cover their position. They're getting out. The potential to run really has been taken out, and the share price is going to revert back to where it could be, or where people accept it trading at. That could be $50 a share, could be $20 a share. We don't know post MOASS where AMC is going to want to sit at when all those short positions are no longer open. So AMC turns around and takes a dive, takes a rapid dive and drops back into, say, the $50 range. Well, when it's at the $50 range, there may have been people sitting back waiting for AMC to hit $3,000 a share, $5,000 a share, $10,000 a share, and all of a sudden they realize the MOASS is over. I missed out on getting out of my position. And it's at that point, that is where those puts that you purchased will become very valuable. Because people who are stuck holding their shares, if they know that there is a way for them to get out and still collect $120 a share, there will be people, if you set up to sell, there will be people willing to buy those contracts off you, because you no longer need those contracts. Those contracts are strictly there for you to make additional profit. The other people who did not sell and who held and were stuck holding when the share prices bottom back out, they're going to see that and they'll start running cost analysis to see, if I go ahead and buy these contracts, do I still have potential to make good profit off it? And 9 times out of 10, the answer is going to be yes. So by buying those puts that you set up to protect yourself with, if you did not need them and the share price turned around, well, all of a sudden you now have the option to make additional profit on top of selling your shares at the prices you chose. So it's just it was kind of a way to be more flexible in your position, and gives you potential. Of course, as you're selling on the way up, you're going to be making money. But why not be able to make money as the share price is coming down as well? That was just kind of something I wanted to touch on, because every day in the market we're a day closer to the MOASS, and we don't know when it's going to be. So every little tool we can throw in the bag, every little trick we can share with each other, making everyone a little bit more savvy of a trader. Come the MOASS is a chance to increase your profits going both directions. So what is up with everyone? I know I heard on the live stream we have people who are not feeling well health wise. I certainly hope everyone gets better. Whatever ailments you have, hopefully you fight them off and are back in good health soon. Let's see. It looks like after that recovery on AMC, we are starting to see a little bit of a pushback. We did have about a $1.40 run up after Claybro left his live stream. Hey, another bot. We got 2 bots in here already. I wish the bots could go smash the subscribe button. I have no problem with bots subscribing to my channel. So it looks like we're giving back half those gains that we just got. Right about centered on it. Yep, Toad dropping the robots in the chat. And I'm still kicking around the idea of setting up a tutorial portfolio here on Webull, just kind of like interactive within our little community here. Still kicking around that idea. Let's see, I want to kind of peek in, go to the call side of the house, drop it back down to 30 strikes. I don't need to see that far out. Covered calls. Yeah, covered calls still do not look good on AMC. YouTube notification. All right, let's have a look at the vertical. Let's look at our bull puts. I'm still sitting back waiting on capital to come in. Lucky I did end up having to wait for capital, because the initial levels that I was looking at for re-entry into bull puts, they would not have worked out. So I think the market threw me a bone there. Definitely had potential. If you look at the value on these, seeing some massive spikes, 240%, 233% on the bull puts, both of the 2021s and the 21-22s. Whole bunch of increased value. Not so much closer to the current share price. I know you can't give financial advice, but could you give us a list of top dividend shares? Uh, yeah, of course. Anytime I look at any individual stock on here, it is not an endorsement of that stock. But I can give you a couple examples of, and we can bring them up and kind of have them charted. But as I said, not an endorsement of any stock at all. So of course, from yesterday, we were looking at realty income, and this looking further back on the daily chart here, looking at since March of last year during not last year, the year before. It's early in the year, so I know I'm going to make that mistake about a quadrillion times. I'm going to make that mistake more times than there are Shib coins out there. So even taking in the unpleasantness of 2020, as you can see, this one has a pretty decent run up. I went over the dividend prices that these were paying out. As you can see, currently 71.74 from a decent share price right around the 55 range. Looking back in this time period when the market as a whole was getting its legs underneath it. So the whole market, was getting its legs. We all of a sudden we saw money coming back in. We saw the market start to recover in this time period here, May into June. So looking at the 54, 55 range right through there, we're now up, 71.75, which is E. E stands for earnings, and the D is for the dividend payment dates. So you can kind of see how share prices are affected by both the payment of dividends and how they do on earnings report. That's what those icons are for. I hope those are the E's you were talking about, Toad. Oh, and I'm getting work emails. So yeah, realty income is a fairly good one. PSEC, Prospect Capital. As you can see, this is another one that, if you go back to the unpleasantness, you were looking, what do we got here? $4.50 price, and this one has ran up. We're looking at $8.60. PSEC, their last dividend. Now, of course, keep in mind that the ones that I'm showing here, these are monthly dividend stocks, meaning that these are the dividends that get paid every month. So these are higher volume. You will see on a lot of these, you will see a lower dividend price and also a matching lower share price. If you look, this is less than a $10 stock. Well, for less than a $10 stock, last dividend payment was 6 cents per share. So it's a fairly economical stock as far as, just share price of dividend. As you can see, they did have a run up to $9.25. And I believe this is a business development company. Let me double check. Yeah, this is a BDC, a business development company. What they do is they lend out money to small businesses that are looking to get started, and a good amount of their profits come back from the interest that they receive from those, for lack of better terms, like a small business loan. So that's Prospect Capital. They're a pretty decent one. Horizon, HRZN. Again, if you notice, a lot of these, they have pretty decent price action moving up. Going back to the period of unpleasantness, 10 and a quarter, 10 and a half, roughly. And as you see, post unpleasantness, they have had a decent run up. They did get over $19 a share. They have had a pullback since the November pullback, and they have dropped down right about $16 a share. Horizon's last dividend payment is $10 per share. Stennis? SCM? Is that Stennis? Yeah. Or Stellis. Stellis Capital. Same thing. If you notice the price action on a lot of these, they will have fairly similar. A lot of these are going to be in your financial sector, whether they're BDCs, They could be companies that handle real estate. They're all in financial and business sector. So based off, if you're looking at the spiders, the spider sectors, a lot of these will be in business and finance. As you can see, same thing with the price action. We go to the unpleasantness. We're looking at 750, 775, right in that range. Running up, we have seen prices get up around $15 a share, currently at $13.30. And Stellus, their last dividend, where is it? Their last dividend was 9 1/3 cents per share. Again, for a stock that is under $14, a 9 cent a share monthly dividend. Not a lot of these are budgetable. They're not, you're not talking about huge amounts of money needed to purchase individual shares. And if you're using something like a DRIP, a dividend reinvestment program, you can see how it's going to, you run out and pick up 50 shares of this, pick up 50 shares of that, and let those dividends keep reinvesting, and you'll get to the point where, every month it's automatically adding another dividend or adding another share to your account. Now, this is one, whenever I'm joking with Monopoly, because I'll check, I have CSX, which is a quarterly dividend stock. I'll go Monopoly. I'm like, okay, well, I checked my railroads. Now let me check my electrical and my water. Well, I do have a monthly water. This is in the utility sector. We're seeing utilities held up better. As you can see, we had the unpleasantness. We did not get the huge run up. It kind of ran stable for a while. This company here is actually Arizona based. It is an Arizona based water company. They handle not only providing water, but they do water treatment, purification, all that type of stuff. As you can see, they had a really, really good run up. What are we looking at here? That was from the end of last year. So from November of 2020, when 2021 started, they did run up, traded sideways, ran up a bit. We are seeing a bit of a pullback on them. Their dividend is not as good. I will tell you up front, they're a lower dividend. But part of the thing behind this is if everything you invest in is in the financial sector and the financial sector gets wiped out, that means everything gets wiped out. So me personally, I kind of like this one just for having a little bit of diversity. It's over in the utility sector. I think it's still listed partly under financials, but it is under water and energy. So it kind of gives you a couple more little, gives you a little bit extra you can do. And this was only 2.5 cents per share. So, like I said, not as much of a dividend, but it's in a sector away from everything else. So it provides a little bit of security against a market pullback. Yeah, we can maybe let's do, we do 2-3 more. We got time. We're just all kind of hanging out. No, there aren't really a lot of questions. So Gladstone Land, this is in that real estate sector. Same thing, and as you can see, the unpleasantness, they barely pulled back at all. We're talking they went from less than $15 a share. They ducked down, still held above 9.5, and we got a nice run up. Nice, not a whole lot of movement. This is a fairly stable one right now. And then you look right here. Started November. The run they went on, over $35 a share. They popped from just under $23 a share up to $35 a share. So this is, of course, one that I hold, and it definitely I love seeing it move upward like that. That is just absolutely wonderful. And their dividend, I like dividends. Their dividend, 4.5 cents per share. I would actually look to see, because a lot of dividends are based off percentages. So with all the run up, I would look to see if there is an increase in their dividend coming in the near future. That would certainly be good. Granted, 4.5%. The market average for dividend, I think, is somewhere between 1.8 to 2% on dividend paying stocks. So even at a 4 cent a share dividend, is it? Oh no, I want percentages. Let's see. It's say I'm not getting percentage on here. It's saying their dividend yield is $1.55 a year. So of course you take that divided by 12. That gives you your monthly dividend. So we got Gladstone Land. This is going to be a fun one here. Oh, did I just lose my internet? No, I'm still up. Okay. So we got Gladstone Land. And Gladstone Capital. They have not had the same run-up. As you saw, this is going back into finance. So they had the heavy hit in the unpleasantness, recovered, and pushed back up. They're not seeing the share prices that Gladstone Land is seeing. And that mainly is because with a market pullback, real estate was doing a little bit better. So looking at real estate versus capital, the financial sector took a little bit more of a hit right now to where real estate is holding up better. And this here is another BDC. This is a business development company. And their last dividend, 6.5 cents per share. I still like that though. But Paul's like, okay, I got my pencil out. And last one we're going to look at will be Stag. And there are tons and tons and tons of, tons and tons of stocks out there pay dividend. There are quite a few monthly. Let me see here. Let me have a look in my. Oh no. Wrong page. Investment. Is this it? Yep, okay. I will actually post. Wow, how many bots we got? This is wonderful. These bots are definitely giving us some good interaction here. And Stag. Is this straight finance or is this a BDC? Okay, Stag. This is an interesting one. This is a real estate company that owns warehouses, and they lease out warehouse space for e-commerce, for online shopping companies. So basically, all their properties or a majority of their properties, just for people who have an online business and are looking for places to store their merchandise awaiting shipment. So another company that they own property and they make their money just by renting out property. So as you can see, same nice upward trend. And this is what I was talking about the other day when I was talking about dividends outrunning. Share price dropping, not covering the cost of dividends, like with the Credit Suisse. That's the exact opposite of what we're seeing here. We're seeing a company paying out, fairly, market comparable, fairly decent dividends, but their share prices are going up. This is what you want to see in a company that's paying dividends, because it doesn't matter if they're paying great dividends if their share price is dropping faster than the money you're making off dividends, and that's one of the, That's rather important when you're investing, because you don't want to just be collecting cash every month but having your overall portfolio dropping. Hey, looks like Simon's in here. I don't see his name in the chat, but welcome 1111 Mr. Simon. Now Stag, as you notice, with the exception of with the exception of Realty Income, this is right here is the second highest price stock of the ones we have covered. And for your 48.27 share price, well, that's the high. We're actually down under 46 now. The last monthly dividend they paid out was just a skosh over 12 cents per share. But when you're looking at about to go get tested, Matt, hope the testing goes good for you. Hopefully, if you do have some sort of a, if you have the bug, hopefully you got a fast recovery. Working out all the time, you should be in pretty good shape to where where you'll hold up better against it. But yeah, so for your share price, you're getting 12 cents per share, and these are monthly dividends. But when you're looking, if you got some stocks that you're looking at, you always hear when in doubt, zoom out. Well, if you're looking for long-term investments, definitely zoom out and see how the stock has been performing. Because if you see share prices that are bottoming out, it doesn't matter what if they're paying a good dividend. If their dividend can't match the share price falling, it doesn't do you any good, especially long term. And I will go. I will actually post on my Twitter. I've actually had a picture. I keep it on my. I keep it on my phone. It is a rather large list of stocks that pay monthly dividends. So be on the lookout on my Twitter page. I'll throw that up there, and it's just would give you a good list. If you feel like doing a little bit of research, digging through these and trying to find ones that are doing good and pay a good dividend in your opinion, and have positive price movement. It's a good place to start your research. Gives you quite a large list. But yeah, these are just a couple. We went over a few here that just kind of show you. There are good stocks out there that aren't super expensive in their share price, and they give you a good dividend. Let's pop over to PROG. PROG on the 5. Still hanging out in that lower level. PROG on the 30? Yeah, PROG on the 30. I don't know how well y'all can see that. I'm not a fan of adjusting this all the time. PROG is still hanging out in the super discount zone. If you look, there's not too that and that look fairly similar. So what does everyone else have going on today? And definitely everybody in chat, kick out positive energy towards Simon. If there's a bug, let's get so much positive energy that he just absolutely crushes the bug and feels better quickly. But yeah, boy, did we cover a lot of info today. Went over possible things you can look at during MOASS for adding flexibility to your trading plan. Just a way to play it both on the way up and on the way down. Y'all know me. I'll go out of my way to try and make money on a down market. So when you start to dig a little bit deeper, there's absolutely nothing wrong with the buy and hold. There's nothing wrong with the buy and hold. Buy and hold is absolutely vital. But just knowing these little tricks, knowing how to take these little jabs at the market, getting trying to get as much as you can out of it, maximize the potential of your portfolio. Maximize potential of your trades and your investments. And then of course, people asking about dividend stocks. This channel is mainly focused on options, but But yeah, there is so much more to the market, and I definitely by any means don't want to be considered just I'm not a one trick pony. I've got at one point I would like to just go ahead and all I'm doing in the future, sharing my regular portfolio. Just I have no problem with letting people know in the positions I'm in. It of course I'm not endorsing the stocks. It's for one reason or another I picked these different stocks in order for my investment future. They were just ones that I liked. I'll tell you, 65 degrees here. I'm sweating like you're in a sauna. Nice Twitter profile pic. My Twitter profile pic? Oh, the black and white with the fedora. Yeah. Yeah, that was actually from my company's holiday Christmas party one year, and it was supposed to be a Roaring Twenties theme. So if you look in the background, got the person with the keep fluids and electrolytes up. Hey, DD14, welcome to the chat, man. As you can see, someone dressed in the back like they're in the 20s, of course. And I was three-piece suit with a fedora on, and for those who know, I rock the fedora. If you look at Julius Caesar in the back there, he's actually wearing my Aussie Outback hat because I like my leather Outback hat. Do I think there'll be a stock market crash in 2020? I don't believe there'll be an actual crash, but I think there might be a couple of corrections. Maybe looking at maybe in the 10 to 15% range. Like we'll catch a correction. The full market will have a pullback. We may the push down at the end of the year in low volume. That may actually stave off. Crashes are inevitable. There's it's going to crash at some point, but a correction at a fairly decent one will actually. She looks like she's holding a Tommy gun. Yeah, market corrections can prolong crashes. It's healthy for the market to pull back every once in a while. And as we can see, the last couple of pullbacks we've seen, market pulls back and it comes back stronger. We just recently the S&P 500 hit new all-time highs. But we are actually getting it's getting to be that time period. My lunch break is just about over. Let me kind of see here. Been drinking lots of water and vitamin C. DD14's been here just working. She looks like she's holding a Tommy gun. And Toad to DD214. So I want to thank everyone who came into the live stream today. Little bit shorter of one, just lots going on with the weather here, lots going on with work, but I feel we definitely covered a lot of good information. I certainly like I like when people ask the questions, and I get getting asked about dividends because that's another aspect of the market. It's another little something to look into. Yeah, pullbacks are the times to buy. That's why it's nice to have a little bit of capital on standby. But I'm going to go ahead and wrap it up. I want to thank everyone who came by. Paul, Toad, DD214, Simon. Who else did we have? Danelle. All the wonderful bots who came by to spend a little bit of time. Thank you so much for taking a little bit of time out of your day to hang out. And I will be listening to all back on Claybro stream in a little bit. So everybody have a wonderful day. Simon, get better. That's an order. I order you to get better. Oh, Danelle, no problem, man. Simon, rock out, man. And I will see all of you later on today. Well, on Claybro stream. But everyone have a good one.